Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 3rd of November 2015 and we're covering the issue of the recent gold and silver price falls. Many people have criticised us for being bearish on gold and silver despite significant falls from their all-time highs. They quote manipulation, imminent stock market, bond market, derivative market and money market collapse for reasons why prices should go up. They quote that China, India and Russia are buying so much that the West will run out any day soon and that their price is going to rocket to the moon. Now those who listen to us carefully and in an objective way know that long term, that is 10 to 25 years, we are very bullish on gold and silver and believe that should the economy decline further, then gold is the better bet of the two, and should it improve, then silver is the better bet of the two. We have for some time, surprisingly to many, discounted the overrated impact that China and India's purchases have had on the market, especially when one compares it to increases in supply, if not peak supply, and the rest of the world demand. Let us give you an example. On the 3rd of August 2015, the Times of India, and for those who criticise us for not quoting our sources, we shall elaborate, Narendra Nathan of the Times of India wrote an article entitled, "No Need to Rush to Buy Gold or Silver Just Yet." Now this is what the article said, word for word. Analysts feel this is not the time to go bottom fishing. Global gold prices touched a 5-year low of 1,090 per troy ounce on July 22nd, down more than 42% from the all-time peak of $1,900 in September 2011. Though prices bounced back a bit the next day, experts feel more pain is in store. The metal is trading very close to the support level of $1,080. If it falls below $1,080, prices could recede by another 4 to 8% in the international market. If the 1,080 support is broken, the next major supports are $1,040 and $990, says C.P. Krishnan, whole-time director, Geojit Comtrade. However, the price may not fall too much because $1,000 per troy ounce acts as a long-term support. It is the mining cost of gold, says Krishnan. Even so, the rise may be capped by resistances. Heavy, long build-up in gold happened between 11:30 and 12:30. All these bull operators are now in losses. They will try to recover their money once gold prices reach 11:30 to 11:40. This range will now be a major resistance zone, says Ram Petra, independent commodities analyst. The article goes on to say, while gold is down, the cut in silver has been more severe. The white metal is down 70% from its all-time peak of $48.60, reached in April 2011. Silver has been hit badly because it also has industrial uses. The slowdown in China has pulled down prices to $14.71 per troy ounce. The downside is not capped here because mining cost is $10. Now since then, we have seen gold rise to $11.85 and silver to $16.14. However, at the time of creating this video, gold stands at $11.18, that's $67 lower, and silver at $15.27, that's almost $1 lower per ounce. So during the past 2 months, as gold and silver prices have risen, just as they historically have in the majority of the preceding 20 years, we have heard all of the pumpers coming out and saying, this is it, this is the next leg upwards, hold on to your hats, the tailwind is blowing and blowing hard. Really? Well, it doesn't look like this to us. Now, before the pumpers begin jumping up and down saying prices have fallen due to manipulation, and we're not discounting an element of this, let's see what reasons other commentators have given. Martin Hayes of the Bullion Desk wrote, "Gold prices were under renewed downside pressure as a fresh week and month started in Europe on Monday, with the market falling under the $1,140 level to its lowest since early October. It would seem that last Wednesday's surprisingly hawkish Fed statement is still having after effects," broker Commerzbank said. The down move was due to a burst of technical selling in Asia, which triggered sell stops below 1140, traders said. Prices hit 1137.10 before stabilizing. Looking forward, with little to be seen on the support side until the medium-term trend line around 1120, and with the producer hedging continuing to add to the topside resistance, it may be a difficult week, broker NKS said. On the data side, China's October Caixin manufacturing PMI of 48.3 was above the forecast of 47.7 and September's reading of 47.2. But it was still the 8th straight month of contraction in the manufacturing sector. A figure above 50 signals expansion, and below that level indicates contraction. Jim Wyckoff of Kitco News wrote today, "The chart-based traders are stepping up the selling pressure on gold and silver markets early this week, as the near-term technical postures for both precious metals are deteriorating. Gold prices hit another 4-week low overnight, while silver is also hovering close to Monday's 4-week low," he added. Traders and investors are looking ahead to Friday's US employment report from the Labor Department, which is arguably the most important data point of the week, if not the month. The key non-farm payrolls number is forecast to be up around 185,000 in October, following a rise of 142,000 jobs in September. Eddie van der Walt of Bloomberg News wrote yesterday, "Silver prices headed for the longest slump in 2 months, and investors sold the most since June from funds backed by the metal on speculation that the Federal Reserve will raise interest rates this year." Now listen to this. Holdings in silver exchange-traded products dropped 93.1 metric tons to 18,887 tons as of Monday, the lowest since July 2013, data compiled by Bloomberg shows. Prices have dropped more than 6% since touching a 4-month high last week, after Fed officials signaled that they are still considering tighter monetary policy this year. Higher rates cut the appeal of precious metals, which don't pay interest or give returns like other assets such as bonds or equities. Traders see a 52% probability that the US central bank will increase rates this year, up from 33% a month ago. Fed Fund Futures data shows. Van der Walt also points out that Bullion Vault's gauge of client buying fell below 50 in October, indicating more sellers than buyers, the company said in a report on Tuesday. The index is at the lowest since data began in 2012. Bullion Vault's gold gauge dropped to a 9-month low. Just over a week ago, Reuters quoted, festive demand for gold in India got off to a tepid start, with local prices still at a heavy discount to the global benchmark, a bad sign for a period when buying is typically strong. Those sales picked up this week with the onset of the festival season. Demand was lower than usual, retailers said, even as jewelers splashed newspapers across the country with ads promising good deals and discounts. In addition to this, we learn that after recording a sharp rise in August, gold imports into India dipped 45.62% to $2.05 billion in September, which is also significantly below that of 12 months ago, which stood at $3.78 billion in September 2014. So there we have it. Gold is down, silver is down, and for those who believe that prices are cheap, then it's a great opportunity to stack. For those of us who believe prices have further to fall, it appears that we may be right. Let's just wait and see. We hope you found this video helpful and informative, and would appreciate it if you would give it a thumb up, comment, and if you haven't already done so, please subscribe. Disclaimer. Silver Illuminati owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we're not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent personal views.